Hello traders, you're welcome to this channel. Today we'll be focusing on how to know if the market is about to change its trend, or you can simply say how to identify the end of a current market trend. You get it? Yes. I am about to open your eyes to what you've been seeing on the chart, but you've never paid attention to it. So please pay attention now and stay till the end, because by the end of this session, hitting stop loss will become history for you. Trading without understanding the clear direction of the market will become history for you. You will start trading with precision and in the direction of the move of the market, following the big boys. You get it? Yes. You know, it's always profitable to follow the big boys. Yeah. Okay, let's begin. Know this key point before we continue. Number one, when the market is in an uptrend, it will continue to break its high, and when the market is in a downtrend, it will continue to break its low. You get it? Yes. And as you can see on my screen right now, this is a textbook diagram, and we'll still get to the chart where I will show you how it works also in the chart. So this is it. You can see the two key points is that when market is in an uptrend, it will continue to break its high, as you can see on this template right now. So you can see, let's start with this bullish one. You can see our market keep breaking its high. This is the first high created, and boom, to the upside, broke the second high, and then put back to break what? The high again. So like let's mark out our highs. This is our high. You can see our market broke the high, okay, push up to break its high again. See, our market keep breaking its high. Let's mark this way. You see, this is the first high. When market created this high, it pulled back and then what? Push up to what? To break this high, and then pull back again, push up to break this high again, and then this. So let's see how it goes. If you use your trend line too, let's use our trend line. You can see our market keep respecting its low. You see, another key point you can understand is that market can still be in an uptrend without respecting your trend line. You can see market can still be in an uptrend without respecting your trend line. You understand this when you see the complete video of market structure. Check the description box, you get a direction to the complete video on market structure. That's when you will understand that market can still break your trend line while it's still what? In an uptrend. Just check the description box and you get a link to the complete video for market structure. What you will see if market is about to change its trend, remember, the first key point is that when market is already in an uptrend, it will what? Keep breaking its high. Now see, market created this high, pulled back, and then push up again, fail to what? To broke its high. That is a first sign that market what? Is giving to you. It failed to what? To break its high, and rather push down to form what? Equal low here. This equal low. See, market pulled back to form equal. Let me take this one. Market pulled back to what? To form equal low, and boom, to this upside, and still what? Form equal high. It failed to what? To break this high, and then boom to the downside. So the next thing, you can see this move pull to the downside to break this low. So the next thing you should wait for market to what? If you want to enter this kind of trade, wait for market to reverse back. This is where using Fibonacci tool comes in. But if you still don't want to use your Fibonacci tool, just wait for market to reverse back to the origin that caused the break of this low, or you can see the break of this structure. Wait for market to pull back to the orange, something like this, and then boom, that side. So you can catch the move either from the 50% level of your Fibonacci retracement, or you wait for it to get to this 100% level you cash it and then sell to the downside. That means what market is about changing its trend. And this is the first one. The first one, you see this first pattern, and this is the second pattern. You can see market, same thing with this. Market keep breaking its high. Yeah, why the only difference here is that when market pull back to create this correctional move, is about to create an impulsive move that will break this high here. Market fail to even get to this high and then create what another move that broke this low. You can see. But on the first one, market did not break its low. Look at the first one here. It fails to break this is low. But what market did here, what it created a move that break this low, and immediately it created that move that break this low, and it pulled back again, failed to create a move that break this high, and rather a move that did not even get to this high to form equal high, and then pull back to what break its low again. So in most cases, this one also happen two ways. In most cases, this move might come to what create equal high, something like this. In most cases, it might come to create equal high, or rather create something like this. And then the next move is what to break this low. So the next thing you should be expecting from this move like this, what you should be expecting next, wait for this trade, pull back to the origin that break this low, either to this point or to form the 100% level, and then boom to the downside. That is how you know if the market is about to change its trend. So have this template on your memory, have it on your memory. Technical analysis is more of you having a mental picture of what the market does. You understand? What you've seen before, having a mental picture of what you've seen before, and try to replicate it again when you see market creating that same similar thing. So all you just have to do, have a mental picture of this diagram so that when you get to the chart, when you spot market creating this move, pull down to this point and push up fail to break this is high, came to create this one to form equal low here. So what you should think that, okay, since you already have this mental picture on your memory, so market would want to respect this high. So you will be one of those people that entered from this point, which is known as sniper entry. Will be one of the people that entered from this point and then to the downside. When a lot of people will be waiting for market to come and break this low and then push back again, then this one you are already what making money because you entered from where, from the top, from the origin. So now let's go to the bearish side. This is for the bearish. You can see it's just opposite of it, just opposite. You see our market keep breaking its low. If market is in a downtrend, market will keep breaking its low. If market is in a downtrend, it will keep breaking its low. You see our market keep breaking its low here. Push down, push up, push down to break this low and push up. We respect this move and then push down to break this low. And you see what market did? Market rather push up, push it down again and fail to what? To create a move that will break this low. Ideally, market was supposed to break this low if market is in a downtrend. It was supposed to break this low to the downside, but see what market did. Fail to break the low. Most time it will come to form equal low here, but you see what market did. The first pattern, it failed to break the low, push up and create what equal high here, and then push down to form equal low here, which is this. Push down to form equal low. See, push down to form equal low and then push to the upside. So that's a sign to tell you that the trend have changed from being a downtrend to an uptrend. You will understand it. So the next thing you should wait for market to pull back to the orangey that caused the Then you look for entry within the 50% of your Fibonacci retracement level, or you rather wait for it to come to form triple equal low and then boom to the upside. I'll show you everything on the chart. You've been seeing this kind of move before, but you've not been paying attention to it. But from now on, you will continue to pay attention to it, and you say bye bye to hitting SL often. Say bye bye to hitting SL, and you will work on following the big boys, which is the current move of the market. The same thing goes here. You see, market will keep breaking its low here, push up, break it low, push up, break it low. The market comes here, fail to break this low and push up to break this high here, and then push down again, fail to what, to even respect, to get to this low, and rather create a move that break this high. So that gives you what, a clear direction that the market is pushing to the upside. So the next thing you should be waiting for a move that will what, come back what, to this origin that create this move that break this high, and then wait for your Fibonacci 50% retracement level, and then boom to the upside. Let me use the Fibonacci for you here and see I build this it. So put your Fibonacci here, from your current low to the current high. You see, this is how you draw your Fibonacci. If the market is in an uptrend, you draw it from the current low to the current high. While if the market is in a downtrend, you draw it from the current high to the recent low. So since it's already in an uptrend, you draw it from the recent low to the recent. You see the 50% retracement level there, 50 or 61% or 78% level. You rather wait for this 50% level or 61% level or 78% level, or market might either come to this 100% level and then boom to the upside. For me, how I trade, I spot if there's any zone within any of these percent level, 38, 50, if there's any zone closer there, that's where I wait for the market to get to before I enter. So if the zone is in this 78% level, I would rather wait for this move to push back to the 78% level before I take it. But most of the time, market will rather come to form another new level, another new zone here on this 38.20%, and then break this high, push to the upside. So it happens. But for me, if market is creating something like that, I don't enter. I wait for it to come to either of any zone that is closer to any of these levels. That's where I wait for market to get to. But there's a trick to still enter when market is in this zone. Maybe market wants is creating a move that wants to expel this 38 level. There's a trick for it, but that's very risky. That's very risky. So as you continue to understand how it works, you will get a better way on how to take such risks. You will get it yourself. So you have to spot it hard yourself. That's how trading works. Most of the things you are not to be told or you are not to be showed, you have to learn it yourself. You have to see it yourself. Now let's move to the chart where we show you on how it was on the chart. Okay, this is on H4 zone. Let me reset the chart. GBP you can see what I do when trading. I follow what the market is currently doing. So when trading, follow the current move of the market. Don't follow the overall move as a day trader. Follow what the market is currently doing. You can see, so from this point to the, let's assume that from this point to this point is yet to happen. So if you should take it this way, something like this. So this will be your current move from here, from this point to this point, should be your current move. From this point to this point should be your current move. What has happened between this point to this point is none of your business. It is what is happening between this point here, between this point to this point, you should focus on, not what has already happened here. So focus on this. This should be your current, this should be your current trend. So let's focus on this current trend. Since something has happened between your market has created what highs and what lower lows within this point. So we should focus on this and forget about this one. So let's focus on this. We are to demarcate this point from this one. So you use these two to demarcate it like this. So this one is here to happen and this had already happened. You see our market created this high here and gave us a low, push up to create this one and give us a new low here and push up, created a what? A created a high that break this one and then push back to create equal low. And see, market wanted to create a minimal change of structure here, but though market still what the seller still shows that they have what bigger power and then they oppress the buyer. Market push back to create this low here, you see. So then market start creating equal highs. These are all equal highs and they create this move to the downside. You see, when market create this break of structure that broke all this low here, market create this break of structure. You see, market push up and then create what? Another break of structure here. And see, market fail. So what you should be expecting next from here, if I'm to enter this trade, if I'm using this what this market has currently do here, if I'm to enter this trade, what I should do or what I will do this. Wait for market to push to this level or anywhere Fibonacci gave me 50%. Let me say, okay, this where I have a good zone. So I'll wait for the market to get to this zone and then sell. You can see for day trader, you caught what some sell here. You can see when market get to this zone. Let's mark our zone out there. When market get to that zone for day trader, they made money from the zone. You can see when market get to that zone, you see market respect that zone. You see market respect the zone, push down before it finally create a move that broke that this high. Let's see how many pip profits. Just 28 pip, 28 pip. 28 pips. So this will be beneficial for scalpers. For me, I don't go for 28 pips. So this will be beneficial for scalpers. So then market what created what? A high that broke this high. You can see this is a new high and they create a new low that what that failed to break this low. So that's to give you a sign that oh the market has changed its trend. When you see this, when you see market do this, push up and then push down and then create a high that break this one. But this, so this is a new high and then create a low that fail to break this one. This is the low and then boom. You see, so that's to tell you that market has changed its trend. You should try to follow the big boys from this point. What the big boys are currently doing. What are they doing? They are what? Pushing the market to the upside. So you should look for buy signals from this point instead of looking for sell. Focus on the buy signal because market as well give you a sign that was it had changed its trend to the upside. You see, if you wait for a pullback, then boom, you enter from here. You make more money than when you are looking for sell from any of those levels. And one thing I will want you to know, how to know if the market has clearly break a structure is when the market broke with a full body candle, not just with a wick, with a full body candle. So you can see from here, make sure you mark when marking your break of structure zone, put it at the wick, not when marking your zone. Your zone should be on the body, but If you want to know if market has fully broken its high or broke of structure, wait for market to break what the wick with a full body candle. So it should be on the wick this way. You can see it's on the wick here. Let me zoom it so that you see it. You can see it's on the wick. You can see it clear now. You can see it's on the wick. So what this candle is, the candle that broke with full body. You can see this one tried to broke, but it broke with what? With wick. You see, these are not break of structure. So wait for it to break with full body. You see, immediately it broke this high with full body candle, it pushed back and then boom to the upside. You see, don't something like this is not a break of structure. Which one like this now? Something like this is not a break of structure. You see, this candle broke with wick. You see, so this is not a break of structure. This one here, before this one that broke with full body. This one broke with wick. Look at it. You see this candle, you see it broke with wick. Look at the wick. You see it broke the structure with wick. So that is not a clear break of structure. Wait for a broke with body. You can see the next one that broke with body. You can see body, the body of the candle. You should know what but you should know difference between the body and the wick. So we've gotten example for a downtrend to an uptrend. Now let's look for uptrend to a downtrend. So remember, technical analysis is more of having a mental picture of what the market has done before and try to replicate it on your next trade. So because a lot of people will say it is easy when it has already happened, when it's already on the chart. It is easy when it's already on the chart. Yes, it's easy. That is why you have to have the mental picture of what you've seen before and then try to replicate it again on your next trade. That is what technical analysis all about. So this is on SAU gold. You can clearly see that the market is already in an uptrend on gold. You can see it's already in an uptrend. And see when market get to this point, market create this high and then create a new low and then create a high that failed to break this high. You see, and then create what? A new low here, which is that came to form equal low, and then create a new high. This is what? Equal high, and it's not creating a new low. You see, it's even pulled down to create what? A high that failed to break this one, but since it's a one candle pull down, let's take this one. So for me, I think this one will come and break this two low to give us something like this, and then come back to a test, and then come back to a test. So do something like this, and then boom to the downside. So this whole week we should be expecting sell for gold, sell for gold, sell for gold. You can check it whenever you see this video. This is for Monday 2025 September 15th. So check it. You can move back to see if it happened that way. So market will either do this or come back to form triple equal low and then push to the upside or pull down to break this low and then create this move to the downside. See, the reason why I said this is equal high, I already told you. The reason why I said this is equal high, it's because, let me delete this, it's because market did not break this week here. Remember, a clear break of structure is from the week, not from the body. So this is the whole week. You can see the move that happened did not break this week. You can see this high that happened yet did not break this week. So it's what I would call this what an equal high, an equal high. So you get it. Now I've told you what you should expect from this move. So we've done the example for a downtrend to an uptrend, and now we've done an uptrend to a downtrend. And don't forget, technical analysis is more of having a mental picture of what the market has done before and try to replicate it on your next trade. You get it? So that is as it work. This pattern work on all time frame, on all time frame. You can use this same first and second pattern on your M15, your M5. Let me see if you spot your entry from your direction from the higher time frame as a day trader from H4 or H1. If you've gotten your direction, then when you move to M15 or M5 to take entry, this same direction you can also spot it on your M15 and M5 to get a good entry. So when you are already in the trade, you can use this same pattern to know if you should close the trade either a small loss or in little profit. If you see market creating any of this move, either the first or second pattern, so and it's reversing to your stop loss, it is best you close in small loss or little profit. Let's say you are already in this move to the upside and you see market creating this move, maybe you swing trade it, you see market creating this move and you are already on this move. So you see market creating something like forming equal high here and then. So the best thing you should do, adjust your stop loss or break even, or you close in small profit or little loss. Let's say you are on this trade, you entered from this, let's say, okay, from this point and to the upside. So the best thing you should do, and your stop loss is here, the best thing you should do is to adjust your stop loss or you do something like this, you break even to this point. So your entry should be, let me use another one. Your new entry, you should break even to this point. So this should not be your new entry. You should break even to this point. So this should not be your new entry. So your stop loss should be on this new low. So you get it. So your stop loss should be on this new low. You break even to here, then target this next move. You get it. So if market break this low here, this equal low here, if market break this equal low, so you should look for a way to get out of the market and reposition again for this drastic move to the upside, or you look for sell move. That is how it works. And also check the description box. You also get a link to how to build your confidence on holding trade through understanding market structure and candlestick pattern. Now we have come to the end of this session. Please, if you have any question, drop it on the comment section and I will definitely answer your question. And I trust you've learned something from this session. Please smash the like button, subscribe, turn on the notification bell, and yes, see you in the next one.